I'm going to show you what happens if you can invest every month starting now and doing the same thing for the next 30 years with different amounts of money. I'll show you the numbers for someone who can invest £50 a month all the way up to £1,000 a month. But there will be a catch here, and this is something that often gets left out in videos like this. So stick with me and hopefully it'll all make sense in the end. But let's start first with these numbers. Okay, so here's the assumptions we're going to make. Every month as you get paid, you're going to make an investment of the same amount of money. And that investment will grow for the next 30 years. The average rate of that growth will be based on the last 50 years of real data. And that works out to be an average of just over 9% a year. In reality, some years will go up more and some years will go down a lot more and maybe even to the negative. But the long-term average of the global stock markets has been 9%. At £50 a month, you end up with £85,821 in 30 years. Not bad at all. And a whopping £67,000 of that is in interest alone. Hopefully that inspires a lot of you out there to start, even if it's a small amount of money like that. Now, what about if we can double that? Well, £100 a month ends up at £171,634. And now you're starting to see how compound interest is starting to work. Okay, now what about the bigger numbers? £200 a month is a really nice investment, and if you can invest this each month, you'll be doing very well. This gets us, after 30 years of investing, £343,286. For some perspective, that's quite a lot more than the average price of a UK house today, so that's a lot of money. But again, more on that topic later as well. Working up the ladder, now we're in some serious territory. £500 a month invested, it's beans on toast every night and nobody's getting birthday presents unless you hit your investing goals. You end up with £858,215, almost £1 million in 30 years. Very, very nice, thank you very much. And finally, for the grand reveal, what about £1,000 a month? Well, starting from nothing and investing the whole time, month after month, without fail, you can end up with, drumroll please, £1.7 million. If you can manage that and start today because of this video, you can buy me a drink when you're next up in Manchester. Now, there is a huge glaring problem with these numbers. As exciting as they are, a lot of people leave this part out when talking about investing returns. I see it all the time, and sometimes I'm guilty of this too when I put a quick example together. But none of these figures account for the elephant in the room, inflation. This one single thing is probably something that should be taught in schools as an essential topic, and knowing what it does and how it works is what separates those people who get rich and those who don't. Once you take inflation into account, the numbers that I've just shown you on screen can change massively. But don't take this the wrong way and feel bad about it. I honestly think it should help motivate you to invest for the right reasons and not just see some number on a screen. For example, just before I go back to those numbers and show you what inflation does to your investment returns, let me just quickly talk about two things. So I quickly mentioned house prices earlier, saying that you could buy a house with your investing money. Well, take the average house in England, which is around £284,000 according to the Land Registry right now. In 22 years, if house prices increase by 6% a year, which is the rate that they have increased for the last 40 years, the average UK house price will be, wait for it, £1.02 million. Yep, I actually had to double check those numbers to make sure I wasn't making this up. An average price house could be around £1 million in just 22 years' time. But that's just in nominal terms without factoring in the effects of inflation. Here's another quick example. What about the state pension? Well, this is going up to £11,500 in the new tax year. In 30 years' time, obviously £11,500 a year won't have anywhere near the same buying power as it does today. In fact, in 30 years' time, if we compound £11,500 by around 3% a year, which is the long-term average rate of inflation across the UK, you will end up with £27,900 a year. I know it sounds crazy, but this is how inflation works. So to buy the same amount of things in 30 years' time, £11,500 will need to be around £27,900. So now let me go back to the investing figures and show you what the effects of inflation actually do to your returns before we dive into some of the really important points that I wanted to share with you. Okay, again, don't let this put you off investing. That is not the point of this video. I'm just trying to show you the effects of inflation, and I really want to talk about real returns here. Investing is still one of the only tools you have to fight against inflation, and in my view, it's one of, if not the best one, as it's accessible to all of us. So basically, as I just touched on there, the long-term rate of inflation per year, both here in the UK and in the US, is around 3%. It's been 3.2% in the US and 2.8% here in the UK over the past 50 years. As with any average figure, there's been loads of times when inflation's been high, like most recently, but then there's also been times when it has been quite low as well. Either way, focus on the long-term average. Now, to make our investing returns real returns, we need to remove the effects of inflation on those numbers. So this means that rather than getting 9% a year, we need to say that we only get 6% a year. So what effect does that have on these figures? Well, I'll put them up on screen now. Now, as you can see, there's a huge difference between the numbers if you actually account for the effects of inflation. For example, the person putting in £1,000 a month, their returns go from £1.7 million to under £1 million, losing almost £800,000. And the person putting in £100 also shows something similar, just on a different scale, going from 170k to under £100,000. Now, they aren't losing money, instead they're losing buying power. So the investing account in 30 years would still say £1.7 million for the £1,000 a month investor. But the point I wanted to raise was that the £1.7 million is only equivalent to that new number of just under £1 million. This bit is also tricky sometimes to understand, but with inflation, it's not the price going up of something, it's the value of your money going down. So in the supermarket, you still want to buy some bread and milk. The amount of bread and milk has stayed the same over the years, it's just the value of your money that's dropped. So it now costs more of that money. Alongside that, you hope that over the years you might end up getting paid more each year too to counter the effects of inflation, so that the cost of milk still costs the same in relative terms. I hope that makes sense, but this is why it's so important to understand, because without some of the basic knowledge, so many people are throwing away money and costing themselves a huge amount of money. Another example right now is this. There's some great savings rates out there, better than we've seen for many, many years. Now, lots of them are over 5%, and I'm personally using the 5.2% rate of interest for my emergency cash in my Trading 212 account. It's paid daily, and it's also a place that I have one of my stocks and shares ISAs. I keep links in the description below for all of the platforms that I use in case you also want to use them. But put that to one side for a second, 5% is a great rate on its own, but without factoring in the rate of inflation, you don't really know if you're making any real money. Taking the latest CPIH numbers just published, they come to 4.2%, so that means that your real gains are only 1%. This is still good for something with very low risk, but you have to factor that in and not just look at the headline rates and also the average numbers when it comes to things like investing as well. Just on that topic of risk, I know if you're a beginner, all of this can seem like a lot and it's very complicated, and I do agree, it's a mess and we'd all have been better off if we were taught this a lot earlier. But I feel your pain and I am with you. But just remember that if you also do nothing, there is risk as well. Whether you invest, save, or just hold your money in a bank account, you get affected by inflation, so it's one of the only times in your life where actually doing nothing at all and staying put has a negative effect. So let's say that you are completely risk averse and scared of saving or investing. You hold all of your money in a bank account. For every year that goes by, that money is losing its buying power. Doing nothing is a guaranteed loss. Even though the number on the screen will stay the same, you'll be able to buy less and less of the same things with it as time goes on. And it's such a shame that this happens and lots of people are not really sure what to do. It all comes back to the fact that we didn't get any of this financial education when we were younger. But anyway, it's not too late to start. It's always a good time to do something, but the key thing is that you just have to do something. Now, the point I wanted to make in this video wasn't that you should just invest the biggest amount that you can every month or scrimp every penny and put it into the stock market for the next 30 years to get rich. It was more of a reminder that everything you do with your money and everything you do with it when it comes to building wealth is just one big battle against inflation. I just watched Dune 2 in the cinema over the weekend and it was pretty epic. There's some massive battle scenes in the desert of Arrakis and plenty of sandworms gobbling everything up. It just got me thinking, the sandworms in that film are pretty much like inflation when it comes to your money. They come after it if you stand around and do nothing, and the only way you can win is if you manage to control them and understand how they work. Now, I won't spoil it if you haven't read the books or seen the films yet, but essentially those people who manage to harness the power of the worms and understand how they work end up doing pretty well and cause some very nice explosions and some epic scenes along the way. Now, you don't need to cause any explosions or get into hand-to-hand combat with a crysknife to do well with your money, but you do need to understand the basics of money and hopefully some of the amazing concepts of investing. You know, at points like this, I'd love to say this video is sponsored by IMAX, and by liking this video and subscribing, you're in for a chance to win tickets for you and your family to watch Dune this weekend. But sadly, this is just a personal finance and investing video, sorry. Maybe one day when I've got a big enough channel. On one final point, remember what I said earlier about compound interest. Investing for the long term to get rich only works if you invest for the long term. I know that sounds simple and basic, but here's why. If we look at that £100 investor's chart over that 30-year period, you'll see that for many years the gains are pretty rubbish, to be honest. I mean, after 5 years of putting £100 a month in every single month, you would have made a total of £984. And that's nothing to be sniffed at, and this is real returns we're talking about. But it's not like you can suddenly retire early. The real money is made after a lot more years when things start to get really interesting. So have a look here. After 22 years, you now have made more in interest than you've put in. So this is a major breakthrough point, as you can see by the way the two different coloured lines start to grow apart. And then by the final year of year 30, you've almost made £62,000 in interest and only put in £36,000. I say only, that's still a lot of money, but compared to what you've made, that's the real bonus here. After 5 years, 10 years or less, anything can happen. And in the real stock market, it's not a straight line up either. So this becomes even harder to do because you'll have to fight through some very bad times most likely. Also, at year 29, after things have gone great, you could face a stock market crash. You just do not know what the future holds. But as I mentioned earlier, if you do nothing, you're guaranteed to fail and get absolutely gobbled up by inflation or Shylud, depending on what reference you'd like to use. That's the worm's name, by the way. So how much money do you need to invest every month to get rich? Well, there's never going to be a right answer for everyone, but whatever you do, please just do something. On that note, see you in the next video. As always, happy investing.